Welcome back, dear learners. Before the ad break, we spoke about the salary scale and were able to calculate annual increases as well as monthly salaries. I am going to introduce you now to deductions. What are deductions? These are amounts subtracted from the salary paid to the employee by the employer. So you find that whatever the employer has promised you, that is not what you get to take home. There are amounts that are deducted or subtracted from your salary. One of them is what we call Unemployment Insurance Fund, UIF. This is a compulsory deduction and it is paid over to SARS. The second one, Pension Fund. It is a deduction that is paid over to a specific fund. Thirdly, Pay as you earn, mostly known as payee. This is tax paid by the employee to SARS. The next one is your medical aid. This is a deduction from the salary that is paid over to a medical aid fund. Contributions. Now, when a company deducts from the employee, most companies will also contribute towards what they would have deducted from the employee. For instance, the Unemployment Insurance Fund. Remember, we dealt with a deduction of the Unemployment Insurance Fund. So we will take a percentage from the employee's salary and put it into the UIF, but the company will also contribute and then put it into the UIF. So the UIF becomes the first contribution. The employer's compulsory contribution, and this is also paid to SARS. Pension Fund. This is an optional contribution that is paid over to a specific pension fund. Number 3, medical aid. It is also an optional contribution that is paid over to a medical aid fund. Salaries Journal. What is the Salaries Journal? The Salaries Journal is a book of first entry. It reflects the gross salary, that is the amount before any deductions, and then it also shows the deductions now, the subtractions. And remember, when you have your gross, then you subtract deductions, you will arrive to what we call net salary. So our Salaries Journal will show us the gross amount that must be paid to a specific employee. It will also show us the deduction, the amounts that we subtract from that gross, as well as the net, what we call the take home. And the employer's contributions for each employee. Remember, we spoke about contributions already. It is prepared monthly and is then posted to the general ledger. In today's class, I'm going to show you how to post to the general ledger. Here is the Salaries Journal. Let us see how we can record information. As you can see here, we have 2 employees. We have B. James and we have D. Tom. Now, we have space to record for D. Tom. Let's see if we can do that. Here's the information. Regarding D. Tom, they say the annual gross salary is 180,000. We now know that an annual gross salary is for 12 months, but our Salaries Journal in this case is for the month of February. So we only need an amount for 12 months. I would then take my 180,000, I divide it by 12, and I would then get an amount which is 15,000. I'll come here. My gross salary is 15,000. I would then come to the next aspect. They say, pension fund, 8% of gross. Very important that you follow that. So I will need to take my gross. You remember how much is my gross? It is 15,000. I'm just going to calculate it over here. And then my pension fund is 8%. So I'll take 8 over 100. I want you to quickly punch that in your calculator, and you should get an amount that is 1,200. 1,200. That becomes your pension fund deduction. The next one that we're going to have is pay as you earn. Pay as you earn. Remember, we agreed this is paid over to SARS. SARS. Then we're going to say the gross salary, then we calculate 18%. 18% of the gross salary. My gross salary in this case is 15,000. And I'm going to take 18% of my 15,000. How much do I get in this case? I want you to quickly punch that in your calculator. Yes, you will get an amount that is, remember, you're using 18%. So you get 2,700. That is for your pay as you earn, 2,700. How did we get that? We said 15,000 multiplied by 18%. The next one is medical aid fund. My medical aid fund is 10,200 per year. This is easy. I simply take now my 10,200, I divide it by 12. That will give me medical aid fund per month. And my medical aid fund per month becomes 850. How did I get 850? I took 10,200, I divided it by 12. Lastly, I have UIF, and they said it is 1% of gross. My gross is 15,000, and I'll calculate 1% of that. That is going to give me 150. I'll come now to my UIF, 150. Total, I need to add everything. So I will now say my 1,200 plus 850 plus 2,700 plus 150. It will give me 4,900. That becomes my total. Total what? Total deductions. After I get my total deductions, I need to get net. You remember now how we were calculating net. How were we doing it? We were saying gross, which is 15,000, minus my total deductions, which is 4,900. Therefore, in this case, I will get net salary 10,100. 10,100. The next part is the contributions, the employer's contributions. And here is the information on the employer's contribution. Let's quickly do it. The first part says, pension fund 20% of the gross. I would then take my gross. You remember how much is my gross? My gross is 15,000. And I have to get 20% of that. So 20% of my 15,000 will give me pension fund contribution of 3,000 rands. We will now look at medical aid fund. And it reads, medical aid fund, 2 rand for every 1 rand. What that means is, for every 1 rand that the company was deducting, the company is going to contribute 2 rands. So, for us to get the medical aid contribution, we have to look at our deduction. How much was the deduction? It was 850. So for us to get now the contribution, we would now say 850, multiply that by 2, because for every 1 rand that was deducted, the company is going to contribute 2 rand. That will give us 1,700. 1,700. That is on medical aid. Then lastly, unemployment insurance fund, 1% of gross salary. We remember our gross is 15,000, and then we will say 15,000, multiply that by 1%. That will give us 150. This is how you complete your salaries journal. We will go for an ad break. I'll see you shortly.